Understanding Fundamental Analysis, a comprehensive guide. We will delve into the fascinating world of fundamental analysis. Whether you're a beginner looking to grasp the basics or an experienced investor seeking a refresher, this comprehensive guide will provide you with a solid foundation in understanding fundamental analysis. So, let's get started. What is fundamental analysis? Fundamental analysis is a method used to evaluate the intrinsic value of a security by examining various economic, financial, and qualitative factors that could affect its performance. The primary goal of fundamental analysis is to determine whether a security is overvalued, undervalued, or fairly priced, helping investors make informed decisions. Key elements of fundamental analysis. A. Financial statements. 1. Income statement. Analyzing revenues, expenses, and profitability to assess a company's financial performance. 2. Balance sheet. Evaluating a company's assets, liabilities, and equity to understand its financial position and solvency. 3. Cash flow statement. Examining the inflows and outflows of cash to assess a company's liquidity and cash management. B. Ratios and metrics. 1. Price to earnings, PE, ratio. Comparing a company's stock price to its earnings per share, indicating its valuation relative to earnings. 2. Debt to equity ratio. Assessing a company's leverage by comparing its total debt to shareholders' equity. 3. Return on equity, ROE. Measuring a company's profitability by evaluating how effectively it generates profits from shareholders' investments. C. Industry and market analysis. 1. Understanding the industry dynamics, trends, and competitive landscape that can impact a company's performance. 2. Analyzing macroeconomic factors, market conditions, and regulatory influences affecting the overall market and specific sectors. 3. Fundamental analysis techniques. A. Qualitative analysis. 1. Assessing a company's management team, corporate governance, competitive advantages, and brand reputation. 2. Examining industry trends, technological advancements, and market positioning. B. Quantitative analysis. 1. Using financial ratios, metrics, and historical data to assess a company's financial health and performance. 2. Conducting valuation models such as discounted cash flow, DCF, analysis, price to earnings growth, PEG, ratio, and dividend discount model, DDM. 4. Limitations and risks. 1. Subjectivity. Interpretation of data and qualitative factors may vary among analysts. 2. Market efficiency. Information may be quickly priced into securities, making it challenging to find undervalued opportunities. 3. External factors. Economic shifts, geopolitical events, and unforeseen circumstances can impact the accuracy of fundamental analysis. Fundamental analysis is a powerful tool for investors to evaluate the value and potential of a security. By analyzing financial statements, ratios, industry trends, and qualitative factors, you can gain insights into a company's financial health, growth prospects, and intrinsic value. However, it's important to acknowledge the limitations and risks inherent in this approach. We hope this comprehensive guide has provided you with a solid understanding of fundamental analysis. Remember to conduct thorough research and consult with financial professionals before making investment decisions. Thank you for watching, and stay tuned for more informative videos on our channel. Thanks for watching.